Welcome back. The big indices are still holding in the green. Sensex and Nifty up about 1/3%, but mid caps still in the red. But definitely the intensity of the red has declined. Let's welcome Gautam Shah, Associate Director and Technical Analyst at JM Financial. He's joining us after a very long gap. Gautam, good to have you with us after such a long time. Well, do you have any good news for the bulls at all? Or do you think the Nifty is going to get a lot cheaper, more affordable?
Good morning, Lata. Good to be back. Well, let me start by quoting the great Warren Buffett, who says that you need to be greedy when the market or others are fearful. And I think this is quite apt in the current environment that we have, because fear is being sold really, really cheap. People are getting carried away with the day-to-day moves that you are seeing in the marketplace. There is a lot of rumors, a lot of talk, a lot of events to look forward to. And I think people are just losing focus on the long-term or the medium-term trend of the market, because I think what's important to understand is where we've come from. Let me just put things in perspective. Let me just take a minute to go back to the last 1.5 years. You know, I thought 2014 was the big breakout year that the Indian market saw. I think no doubt about that. And that breakout is likely to have bullish ramifications for the Indian markets for the next 3, 5, 7 years to come. Given that, I think in the second half of 2014, you had just about all the positives being discounted. The Nifty moved up 30% in a matter of 6 months. And, you know, there was a time wherein me as a technician, you know, I was a little worried because everything was happening too fast. 6,500 to 9,000 on the Nifty happened in about 6, 7 months. And then comes a year like 2015, wherein almost the entire year, you know, the market has consolidated, and you've seen the Nifty lose about 17% from the top. So if you really put all of this in perspective, I think 2015 has been a great year of consolidation. I think the price damage has been done. The time correction has taken place. And now if I really look at the charts, I think the risk reward is extremely lucrative to go long or to create portfolio positions for 2016. I think you have a scenario wherein there is a selling climax which seems to be playing out. Just about every negative has been discounted into the price. And I think the screen of the last 2 days, you know, really does tell you that there is capitulation. Also, if you look at the charts, I think it's around this 7,500, 7,550 zone that there are a lot of long-term supports kicking in, you know, based on studies like trend line, Fibonacci retracement, Elliott wave, you know, moving averages. So I'm strongly of the opinion that the market will find a durable bottom somewhere in this 7,450, 7,550 zone. And if we were to see a recovery from these levels, we can actually quickly get back to that tug-of-war level of about 8,000 and then possibly 8,300. But this is really a view for the next many weeks. I think if you have to really look at it from a 2016 perspective, which I would advise investors to do, I would not be surprised if by June, July 2016, you could see the Nifty as high as 9,500. So I think at 76, 7,700, do not wait for those last 100, 200 points. I think this looks like an opportunity and investors must grab it.
Aapke muh mein ghee shakkar, Gautam.
Yes, 9,500 on the Nifty by June 2016. You know what, Gautam, we missed your infectious energy and, you know, your eternal optimism for so long. But now that you're back, tell us, if the market does head to this level of 9,500 that you spoke about by the first half of next year, what are the sectors that could lead it there?
Well, I think it has to be the banks. I think the banks are the lifeline of the market and of the Nifty. I think if you look at the last 6 days when the Nifty has come off so dramatically, the banks have actually shown a lot of resilience. And when I talk about the banks, I really refer to the private banks, because the PSU banking space, you know, has seen a lot of damage and it's still not looking too good on the charts. But the private banks, I think the top 5, 6 names still have an excellent setup from a medium-term perspective. And I'm strongly of the view that if the Nifty has to recover, it has to be led by the banks. So I think that really would be our best bet, not only for the short term, but even for the medium term. And I think that would be followed by the auto stocks. You know, autos I've always maintained is an evergreen sector. If you look at the charts, you know, it's just consolidated, corrected at routine intervals. But never have we seen a major damage in the auto chart. So I would like to believe that the auto index could give you as much as 20% upside over the next 3 to 6 months. And this would be followed by FMCG. So, you know, these 3 would be my top picks, and this is where we are recommending our clients to go long from a positional angle.
Okay, let me drill down a little bit. When you say banks, so far that has been construed largely as private sector banks. Would that be your definition?
Yes, absolutely. I think it's the private sector banks that I'm talking about. And if you look at the Bank Nifty levels itself, I think 16,500 on the Bank Nifty, I think is a very, very critical level to be watched for the next 1 week. If this breaks, maybe, you see another 2 to 3% downside. But broadly, this zone of 16,000, 16,500 for the Bank Nifty should hold out. And it might hold out because of the private banking stocks, because there I think the long-term setups are very, very strong. And names like ICICI Bank, and a Yes Bank have seen significant downside in the last couple of months, and they are all approaching long-term support levels. And I would like to believe that these support levels will hold going forward.
Okay, so ICICI Bank and Yes Bank support levels can hold. What about the auto stocks, Gautam, since you're bullish on that? It's a tricky terrain, because a lot of auto companies like the Bharat Forges, etc. have come off substantially this year. If you had to pick 2 or 3 stocks that look like they formed a durable bottom now, which ones are they?
Well, I cannot give you stock-specific names because of compliance, but I think as a sector, we are very, very positive, and I think the popular names which are traded in the F&O space all have a good setup. But the issue is people look at it from a day-to-day perspective. I would want investors to look at it from a 3-month, 6-month, 12-month perspective. And I think if you do that, since this is a sector that has continued to make higher tops and higher bottoms in a scenario wherein the Nifty has seen a correction of almost 10 months. So I think, when you have good times for the Nifty once again, these are the sectors that will, run up the most. And that's the reason this is a good phase of accumulation.
Okay, I mean, mid-cap is not a great index to track, but that one gave better gains, and a large swathe of mid-caps gave better gains in 2015. Will there be a role reversal now and the big boys will come back?
Well, the big boys will come back, but I don't think they'll be able to beat the mid-caps and small caps, anyhow, because I think mid-caps have been the silver lining of 2015, and the way the mid-caps have behaved actually tells you that what has happened this year is a bull market correction and not really a bear market.
Okay.
The Nifty has lost about 17% from the top. The mid-cap index has lost 10% from the top. Typically, if this was a bear market, you would have seen carnage in the mid-caps and the small caps, and that's really not happened in the last few months. So I think this is still a stock pickers market, but I think the big boys, the large caps, have to make a comeback. And once the bull market resumes, I think the large caps and mid caps will move in tandem.
All right, Gautam, we've run out of time. We would have loved to chat some more, but on that very optimistic and happy note, you have a good day, and thanks so much for giving us your views.
Have a great 2016, and do appear on CNBC TV 18 oftener.